All right, I guess I should do a sound check. You guys can hear okay? We're good to go? Yas. All right. All right. Cinco by Cinco. So in theory, and I'm trying to, so I usually don't do this with a webcam. I actually like to stand up and walk around. So this will be fun. And you guys can see this is my trading office. So I kind of like this painting in the back, if you can see it. It's two boxers. So I thought that was pretty cool. And then, oh, let me grab this. This is my good luck charm. Hold on a second. So that's a 1,000-ounce bar of silver. I keep it in my office. I figure, I think it's a good luck charm. I don't know. It'll probably be a better luck charm when silver's at $50 an ounce. First of all, quick question. How many of you I did a webinar on this 2 weeks ago, and this was I was just curious how many here were at that, and just kind of get a sense. And versus how many people, this is their first time seeing this webinar. Yeah, put it on a charm necklace. Nice. Okay. All right. So this webinar is different. During the last webinar, I spent a lot of time really kind of talking about kind of my summer adventure with my oldest son, and then kind of the tools we developed to help him meet his goals. And although I'll talk a little bit about that tonight, what I really want to talk about is that since I've been using these tools, my own trading has changed drastically. And so I just want to talk about that. And let's just dive right in, and we'll just get going. And as usual, if you guys have questions and stuff like that, just let me know, and let's just dive in. So if you guys have noticed, the market is a little volatile, and a question that kind of comes up is, what's going on here with the markets? And really, it's not that we as humans have changed. It's the market is insane right now, and really none of us, I mean, including myself, I've been doing this for over 30 years. We've never seen a market like this unless you were actively trading like in the 70s. This is new. And so the paradigm has changed, and it is important for all of us to understand that. So is it different this time? The answer is yes. Okay, we are in no man's land. The Fed is on track to put us into a recession. They want to put us into a recession. So why would they want to put us into a recession? Because inflation is a security risk to a country, while a recession is not. Okay, that's an important thing to understand. They're willing to put their citizens into hard times to prevent inflation. All right, so they don't care that you may have to have a hard time with the actions they're taking. They don't care at all, and it's important to kind of put that into context, right? So inflation is measured as a rate of change, and now people are excited. I mean, by people, I mean government officials are like, hey, inflation, the rate of change has not gone up. It was going up from 5 to 6 to 7 to 8, and now month over month, it's like the same. So they're excited because they think that means that inflation is slowing down. No, it's being locked in. Okay. So, but the underlying price increases that we're seeing in a lot of things are going to be permanent. All right, that's what happened in the 70s. Prices for services are going up while asset prices fall. So we're flying to the Cayman Islands over the Christmas holidays. We've done that before. This time around, our plane tickets are 156% higher than the last time. Okay, not 20% higher, 156% higher, and the flight has sold out. So that's what I mean. So yeah, stocks are falling. Real estate will eventually come down a little bit, but not as much as people think. We'll talk about that as well. But it's not like all the prices are going to come back down to where they were. So normal wages will not be able to offset this. This turns cash officially into an asset. For most of our lives, cash is trash. That is not true anymore. Cash is an asset at this point. With asset prices coming down, cash gains value as those prices come down. So basically, this is a financial education crisis that the citizens of the United States and around the world are experiencing. That they've never seen this before, and if they don't know how to handle it, and they're going to keep doing it the same way they've always done, they're going to get screwed. So the ones that have the least knowledge are the ones that are going to be hurt the most. So how do we know that the Fed is deliberately putting us into a recession? Well, look, this is the path that they're following. You'll notice here, this is not a secret. They're basically going to have to start cutting in late 2023 and 2024, and they know they're going to have to start cutting. And probably in 2025, we will have interest rates back below 1% again, because the economy is going to go in the crapper, and they're going to have to bail it out because they can't afford to have things fall too much. So that's what's happening. So this makes trading different as well. For a long time, we've had the tailwinds at our back, and the Fed would bail us out. And if the market sold off too much, you guys have heard of the Greenspan put, the Powell put, all that kind of stuff. Buy the dip, baby. And today we're being told not the truth, but whatever will keep us from worrying too much about the financial future, whatever will keep us from, protesting on the streets. We've got to keep the population calm. Over the summer, this hit me like a ton of bricks. We cannot trust the financial system to magically take care of us with steadily rising asset prices. And that's kind of the bill of goods we've been sold by Wall Street. Now more than ever, it is about developing specific trading skills that you can use to generate consistent income for the rest of your life. In other words, our ability to generate cash, to live on, to use it to buy hard assets by whatever means necessary, will have the most direct impact on us today, as well as our future and our kids' future. So it's important. So consider that the people in charge are clueless and mostly concerned with hanging on to power. There's a great saying I've heard about politicians, and politicians have three main priorities. One is to get on TV, two is to get on TV, and three is to get on TV. It's basically the movie business for ugly people. It's a place to go for people that have ambition, but they failed in business. They all go into politics. Okay, they're basically morons. So that's who we are entrusting to save us, right? And this is the situation that they've gotten us in. And I don't care. Like politically, I'm agnostic. Nobody, whoever's in charge, nobody's sending me a check. So to me, it's like anyway, blah blah blah. That's a longer conversation. So so the question here is, all right, so this is a chart of the 2000 rally. Okay, very similar to what we've just experienced. And if this is a mirror of what we're looking at, we're kind of right here. We had the big plunge, we've kind of rallied a little bit. And so the question is, are we going to get something like this where everything just dies? I mean, I don't know. I don't think so, for a variety of reasons, but if it happens, it happens. But the main thing here is like, okay, well, if it's going to go like this, why don't we just short stocks and call it a day? So in a situation like this, you buy the dip, right? You profit. And in a situation like this, you sell the rally and you can profit. So why don't we just do that again? And if the situation was the same today as it was in 2000, I would say, yeah, all we're doing here is just flipping the playbook, and it's not a big deal, right? So if it were that simple, then yes, absolutely. Instead of buying the dip, sell the rally. But it is not that simple. Why? Because funds don't sell stocks. A lot of funds, index funds, hedge funds, yeah, they're going to be actively buying and selling, but they also have a charter where they got to remain invested. So it's not like, oh my God, I got a sell signal on the 5-minute chart. We're going to blow out, $1 billion of the Apple, right? So they don't do that. As retail traders, we have the advantage in that we can right click and get out of our position. Funds typically can't do that. First of all, not only because their charter maintains that they have to have exposure to the market, but then also along the same lines, they're not supposed to be market timing. They're just supposed to have exposure to the market, right? But they can hedge, and that's the whole key here. So the new reality is that with the advent of daily SPX options, the options market is officially driving the stock market. And for people who do not understand that, they are going to be taken advantage of. So you got to think about violent chop instead of, the days of steady uptrends are gone for now. And I think they're gone for several years, frankly. But I don't think we're going to see a valuation steady walk down either. I think we are going to get some violent chop both up and down across multiple assets. Okay, so why is this important? So if all this sounds complicated, don't worry. This is a little background as to where we're going. It's just the backdrop of the current market and the changes that have taken place with the explosion and activity of SPX options. So how big is this? All right. So here I have equity options in 2019, VIX options in 2019, and SPX options in 2019, total volume on an average day. Equity options, 1.6 million contracts traded. VIX options, 167,000 contracts traded. SPX options, 947,000 contracts traded. What about today? 2022, 2022, 2022. Average equity options, 1.7 million, about the same. Okay, give or take. Yeah, an additional 68,000 contracts. So I think that's about a 4% increase. Okay, nominal. VIX options exploded, 604,000 contracts on average. It's like 250%, 436,000 additional contracts a day. But most importantly is the SPX, 2.5 million contracts a day, an additional 1.5 million contracts. Why is that important? One SPX option controls $300,000 worth of stock. Basically, the daily volume in the SPX option controls about $750 billion with a T of stock every day. As we all know, and we've talked about this, so goes the SPX, so goes almost all stocks. If you're long Apple and the SPX is down, guess what? Apple is probably down too, right? If the SPX is going up, Apple could potentially lead the charge, but it's going to be dependent on the SPX and, of course, the NDX. But today is so goes the SPX options market, so goes the SPX. It's kind of like the, tails wagging the dog. So the options market drives the SPX and the SPX drives your favorite stock. So what does this mean? Why is this happening? It's because of the hedging. When there is demand for put protection, all right, if the market declines, the puts, so let's say I buy 10 puts, right? Oh my God, I think the market's going to go down. I buy 10 puts on the SPX. And if the market's going down, those puts are going to gain value, which is great. However, the person who provided that liquidity, which we call a market maker, sold those puts to me, and he or she or the computer does not want to lose money. So if they're selling me those puts, they're also shorting stocks and shorting S&P futures to mitigate that. So they're hedged, right? They're going to make money on the commission. They don't want to lose money on it. So what happens now is that with 2.5 million contracts trading every day, lots of people can buy put protection. And when they're buying put protection, it causes the markets to go down faster and quicker. But then at some point, guess what? If you buy a put at 10 and it goes to 30 and they feel like they don't need that put protection anymore, they take off that put. And now the market maker has to buy back those short futures, has to buy back those short stocks. That's why we're getting these violent swings, and they're getting more violent every day because of what's happening in the SPX options. To the extent that we are aware of this, we can use it to our advantage. To the extent that people are not aware of this, they are just going to get hosed. So it is this action that's driving it. So good news is I accidentally found a way to chart these rotations. 2 weeks ago, I did a webinar on my trading adventures this summer with my oldest son, James, and it stressed me out because of all my kids. He showed the least interest in trading, but he was my oldest. I'm like, I got to show my oldest how to do this, and I'll talk a little bit more about that. But, I knew as a dad, I had to step up and kind of hit a home run with him, just so we'd have something to talk about and work on and bond together. And if I screwed it up, it's like that was going to be on me. So after a few weeks of tweaking and going back and forth, we got into a groove where he was making $100 a day trading stocks. All right. And his reasoning for that, his rationale for that was like, well, my two friends are working at Subway and they're they're making about $80 a day after taxes. If I could just make like $100 a day, it seems like that would be better. I'm like, okay, you think? So we'll talk a little bit more about that. But first, what I want to do is really talk about how the aha moments that I had with this, okay? Because at some point, it really hit me with this is just how important it is just to get the cash. Okay, I know this may sound obvious, but what I mean here is not trying to nail a big move, not trying to be right. Okay, I just want to grab the cash and let it compound, not trying to catch a multi-week or a multi-month trend, especially in this environment, just grabbing the cash. just generate the cash and grab the cash and screw the ego. Okay. Meaning I don't want to be right. I don't want to, it's like, oh my God, I held on to this trade for, 6 weeks and I made $1 million and I held through all the agonizing twists and turns and I didn't know how, wasn't sure that it was going to work, but oh my God, it did. For what? Right? What if I could just generate consistency every day so that over the course of 6 weeks, instead of having one agonizing trade over 6 weeks, it made the same amount anyway? Okay. So, how best to do this? So, I started using the SPX options with spreads, the same signals that we set up for James that took a couple of weeks of playing around with. I started using the same signals to do spreads on the SPX. Now, I'm a directional trader. I don't necessarily like spreads. If I think something's going up, I'm going to buy calls, or I'm going to buy futures. That's how I was trained. And I'm like, if you got an idea with it, you got to man up, right, and do it. But here's what happened as I started doing spreads and my consistency exploded. So I'm like, okay, I guess I need to pay attention to this. I'm a trader. I've been doing this for a long time. I can take a couple of days in a row where I'm not making money because I know, over time it's going to work. But do I need to have losing streaks? Do I need to, is that a thing? Is that something that I got to deal with as a trader? So instead of looking for big trades that could net, $3 million, I mean, it's like, oh my God, here's another Tesla trade. Why not just crank out consistent gains and reach that goal over time? And so what this started was this kind of this thing of like, wow, 300K a day and 10 days in a row of that, fairly low stress, making the same amount as a big, maybe more, let's say like, okay, maybe it's more of a rush, like, oh my God, $3 million in one trade, but it's more stress, it's more uncertainty, right? It's a lot more on the line. If it doesn't work, I'm taking a much bigger risk. So it all just kind of came together. So I want to just show you a quick snapshot of the charts that I'm using, but don't get overwhelmed by this because I'm going to, I'll explain in way more detail during the class. And even though it may look complicated, there's a few key things on here. So over here, this is just a 30-minute chart. And that's just kind of what I look at just to kind of get a ballpark. What's the RAF doing? Is there a squeeze? And I've got the trend rotation, which is this new tool on the larger time frames, and then a snapshot. Okay, what's going on over here? But really what I'm looking for is, you remember when I talked about like, okay, if people are buying puts on the SPX and the market makers are having a short options, you're going to see moves like this. Okay. But at some point they're going to buy back. They're like, okay, we got to take those profits. And so I wanted to try to get an idea of that. And so what I found with this is that, okay, so here's a 5-minute chart, right? Again, don't worry about taking notes or anything like this. I got a checklist we're going to go through in the class. But on this 5-minute chart, I've imported the 21-period exponential moving average from the 30-minute chart. And here I've got the 50-period exponential moving average from the hourly chart. And then I've also got Keltner channels from the hourly chart. And so what I'm looking for is we get down, typically 1% away from that 21 EMA. I start looking for buy signals that it's going to reverse. And then you can see here we're starting to turn up. Great. I sell an at the money put credit spread and I'll stay in until we get the arrows. Now this move was only about 10 points in the S&Ps, but guess what? Those spreads decay pretty quickly. Now this was a trade we did in the room I think on Monday. We gapped down and immediately got buy signals all over the place. We sold the at the money put credit spreads. And then once we started getting these dots, we got out because it's saying like, hey, whatever hedging is going on here, it's running out of steam. So let's just get out. But the great thing about this is that when you're doing 0 days to expiration spreads, now don't get me wrong, you can load up on the futures here and that's a great move, but the decay is so fast. And what's great about that is while you're waiting, you're not that nervous because even during the chop, you're making money. And of course, if it goes against you, it goes against you just like it would any other thing, but you're able to kind of get out of it a lot cleaner. So on something like this, typically what we're doing is just, okay, the market's open. Great. We got some buy signals. I'm selling some at the money put credit spreads, right? And then at point number 2, when we're seeing the red dots, and in this case, we went from, 38.55 to where we got in. And at point number 2, we move 30 points. So the spreads that we sold, they've pretty much plummeted, right? But the thing is I don't want to hold on. I don't want to be sitting there like egg on my face and it comes all the way back down. once I start seeing the sell signals, I just get out of the spread. I don't have like, oh, I got to get 80% of max profit, or oh my God, we got to get to 38.95, right? None of that ego stuff. It's I want to get in when there's a rotation buy signal, and then I want to exit when it's showing signs that it's coming to a pause, right? I don't want to guess or anything like that. So that's the nutshell of this. And so we'll step back and we'll look at some of this. Yeah, and I'll show you charts from today. So today was the first day that I watched these with the Fed. And so since it was the first time I kind of watched, and I was kind of shocked how well it worked in terms of holding these key levels. Okay, and we'll talk about that. So another thing that I like to do on this is, so typically I'm doing day of, but you'll notice here these bands. So these are just 3.5 ATR 60-minute Keltner channel bands. Again, I'm importing, a lot of this is just importing stuff from a higher time frame. So that's the 5-period EMA from the daily chart. That's the 8-period EMA from the daily chart. That's the 21-period EMA from the daily chart. So I can see all that in the lower time frames. So on something like this, around 12 noon, if we're in the middle of these bands, I will sell an iron condor for the next day, okay, just outside of those bands. And so typically what I do is I sell it at 12 noon, like on a Monday, and then at 12 noon on Tuesday, I'll buy it back. And that's also been a consistent one. Okay. And again, that's the checklist, like, okay, if we get here and blah, 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 blah. But the main thing here is you'll see is that, when we get these rallies, okay, remember, this is, again, 5-minute chart, but we imported the 50-period moving average from the hourly chart. When we get up there, that's typically where it's going to run out of gas. And when we see these red dots, okay, guess what's happening? All these things are starting to roll over. So you can look at this and say, my God, that's a mess. And look at all these dots. And okay, don't worry about that. It's when we get too far away from here, we're looking for signs to enter, right? Those are signs to enter. But then as we get up here, if there's no red dots, we'll just keep holding. But as soon as there's red dots, that's telling us that this is rolling over, and just get out, grab the cash, grab the cash, grab the cash. So that's what we're looking at there. So these are typical trades that I've been doing. And this is totally different than what I usually do, right? Okay, so here we are. And of course, this is a bigger account, right? And I'll also talk about what I'm doing in a smaller account. So you can see that I initiated these at the time in the money spreads, 38.50, 38.25s. And this is, earlier in the morning. So they're slightly in the money, kind of at the money. And I'm selling these $25 wide for $11, give or take, $11.15. That's typical. Now, the good news about this, if it goes sideways, I'm going to make money. Right? Obviously, if it goes down, I got to manage that. But if it goes sideways, while I'm waiting to see if it's going to turn, it's low anxiety because I have positive theta. And then, as I started to see the red dots, the first couple I got out. So I got out at 720 on the first red dots. So sold a third. And then on the second red dot, got out at 650. This is that theta decay. Because remember, we were just chopping around up there, but that theta decay is dropping dollar bills. Is that the right saying? And then I got out of the last ones at 590. Okay. And that's a pretty typical trade with this. And then after that, I got the sell signals. Guess what? Then I did afternoon. I'll do slightly out of the monies. And here I did, these were call credit spreads for $5. And you'll notice I was in this trade. So I got in these trades at 8:30. And I'm out at 9:05, 9:06, and 9:24. So I'm in this trade for 35 to 40 minutes. This particular one, I sold these at 5 at about 9:50 a.m. And then by 10:30, I was able to buy them back at 3, 260, 250, and 235. And again, those are kind of typical trades in this, where in this particular case, it's like, okay, great. I'm buying here. And then I'm exiting those longs, and then I'm setting up call credit spreads. And then as we come down, I start to take them off. So again, just kind of catching those rotations. Okay, so what have I had to learn to do this? Because this is a different style of trading for me, right? So first of all, and this has been a big one for me, I don't set targets. All my trading life, I've had a target. Okay, I think we're going to get to 39.25 on the S&Ps. I think we're going to get to 308 on Tesla, yada, yada, yada. And what happens, though, is that when you set a target, your ego steps up and says, well, I don't know how many of you guys have done this. If your target's 309, okay, you buy it at 300, your target's at 309, it gets to 308.25, okay? and you don't take it because it's not at 309, and then it rolls over and stops you out. Now, that's an extreme example, but that's the kind of stuff that happens when you have a fixed target in mind. Or you sell a spread, okay, and you're like, oh, I'm going to buy it back at 80% max profit. And it gets to 75% max profit, but you don't take it because it's not at 8, because you got your limit order working, and then the market rolls and you go to max loss. That's the kind of crap I wanted to avoid. And the only way that happens is because of what's here. It's not what's happening on the chart. So all that is ego, ego, ego. And I just it was funny watching James trade, because he's like, I just got my $100. I'm out. I'm gonna go work out. I'm like, aren't you gonna stare at the charts and look at another trade? He's like, no, I'm done. So it really kind of hit me like, wow, this whole BS of playing out this drama of, is it going to hit my target or not, is just horse crap. So basically, entry signal, high probability spread, exit signal, rinse and repeat. So, sometimes, look, the spreads don't work out great all the time. I might get into a spread at $10 and I get out at 8. Okay, that's not my desire. But if it only goes up a little bit and starts to roll over and I get sell signals, I'm getting out. I'm not thinking about it. Anytime I try to override the charts, I find I get frustrated. So I just go with the flow. So that's what I've been having to learn. So this was another trade on Monday, and these are great. So the morning trades are a little quicker. So this is the morning trade. You kind of gap down. We got the buy signals. We moved up into the 50 period moving average from the hourly chart, which is imported in. We got the red dots. We got the hell out. We sold some call credit spreads, back to the 21. And then typically during 11 to 12:30, give or take, I go work out. I mean, I don't, I'm trying to do this where I'm not staring at the chart all day. And then we come back and it's like, wow, we're sitting here at the 21 EMA on the 30-minute chart. Again, that's imported into the 5-minute chart. Great. Let's sell put credit spreads. And we sold the spreads. We go up. And the beauty, okay, I like doing them in the morning, but the beauty of the afternoon is the theta decay is so fast. Okay. Yeah. Had I bought, futures, long at 38.81 and sold them at 3900, that's 20 points, right? That would have been better. I sold these spreads at 5 and bought them back at 2. But because they're spreads and because they're more forgiving, where I would have done, say, one futures contract, I'm doing 3 or 4 spreads. So guess what? I'm making the same amount of money had I been directional, but I'm taking a lot less risk because it's a spread and because it's positive theta decay. And again, what I'm doing down here is just like, okay, great. We're getting multiple rotation turns here. And so you can see on this particular day, on this particular one, it's like, okay, great. I'm going to, these are the, I'm selling them at 5. Okay. This was the 38.75, 38 spreads here. And then and that was at 1:30. And then 30 minutes later, I'm buying them back for 80 cents. And of course they expired worthless, but I got out when I got the turn. So on this particular day, I did SPX for $315,000. I did some ES trades as well. I kind of like to do both. But I still find that the SPX trades are easier. And so I don't do as big a size on the futures. Okay, so the trades later in the day they're nice because the theta decay is so fast. So I typically will take a trade or two during the first 2 hours, then take a break, go work out. I work out 3 days a week with a trainer, and then I also do yoga 2 to 3 days a week with a practitioner. And it forces me, because if I don't do that, I won't do it. So at 12 noon when the trainer shows up, I go work out because of shame. Like if I don't go show up, I can't handle the shame. So that works for me. Okay, so how many contracts I've been doing? So I'm two accounts. I've got a large account. I mean, look, it's got $6 million. It's a large account, but the point is what is the percent I'm trying to make every day? So on the large account, I'm doing one contract per $20,000. So on a $6 million account, that's 300 contracts with the goal of making 300K a day, which is 5% a day. Now, I'm the first to say that's pretty aggressive. I've kind of thought, well, geez, what if I only tried to make, 100K a day, right? So that would be 100 contracts a day, or one contract per $60,000, right? So, it's 6 of one, half a dozen of the other. The point is, I want to make it clear that it's not like, oh, here's a $100,000 account, I'm making 300 grand. It's trying to make 3 to 5% a day, minimize any losses, because the compounding effect is amazing. So it's aggressive, and I've thought about easing up on it, but we'll see. So we talked about the typical trade, the spread and all that kind of stuff. So then what about, I got the smaller account too. So a couple things that I've learned. If it doesn't work, right? If I get exit signals before too much has happened, then I'm usually getting out for a scratch. So let's say I get in, there's some buy signals, the market's going sideways, and I get a sell signal. Well, typically at that point, because sometimes people ask like, well, you're selling $25 wide for 11 bucks. So you're saying you're willing to risk, whatever is that, like $16? Well, the point of that is no, I'm not willing to risk, once I get a sell signal, I'm getting the hell out. So the nice thing about this is that, it's not like you're going to roll over and sell off 20 points and then get a sell signal. Because we're using multiple time frames, cheers. Because we're using multiple time frames, I'm able to see what's going on quickly and on multiple time frames and be able to ride these ebbs and flows. So I have tried a few NDX trades, and I have found that either I love them when they work or I absolutely hate them when they don't. In the SPX, if I get into a signal and it's not working anymore, I can get out pretty quick. NDX, good God, it is hard. So I'm just going to save you that frustration. I've had some good trades in the NDX, but my worst trades have also been in the NDX. And then I had to use the SPX to kind of save my bacon. And sometimes I will do straight futures trades. It just, depends on what's going on. But man, spreads are just the easiest. So first trade of the day I do is slightly in the money. After 12 noon, I'm fine with actually going a few strikes out of the money because the theta decay is so fast. And then the last trade of the day, what I've learned is I'm not doing pins anymore. Like if I think it's going to pin at 3,900, I might do a 3,900, 38.90 put credit spread. And then that way, if it blows through it, I'm fine. But typically I'm trying to make my money before the end of the day. I don't want to try to, make my nut the last trade of the day into the close. So I'm also doing trades in a $50,000 account. So in the $50,000 account, my goal is also to make 5% a day or 2,500 bucks. And for this account, I'm doing $10 wide spreads, and I'm doing one contract per $10,000 since the spreads are narrower. I've tried $5 wide spreads, but here's the nasty little secret with $5 wide spreads. Because the options are so close together, that one that you bought for protection does not lose value very much. It needs to be further away from the price action to evaporate. And so what happens with the $5 wide spread is you may get a nice move of say 10 points in the SPX, and that spread you sold at 250 drops to 220. Who cares? If you'd done it $10 wide and sold it for 440, it'd be at $3 now because of that. So that's the dirty little secret of options is you do want, it's much better to do like say, one option $10 wide than 10 options $1 wide. It's the same risk to reward, but it's going to be way more easier to make money on that $10 wide option because of that and how they work. Now look, there's the two things that come up with this is like, well, geez, my account's less than 25K. I don't know if I can't really day trade, or I only have a limited number of day trades. And that's true. And that sucks. The way around it, though, is you can do ES futures options. So the ES options, which is the S&P futures, you just have to enable your account. You can do the same thing. It's the same movement. It's the same setups. Everybody thinks like, oh my God, ES options are so scary. They're half the size of the SPX. They're actually a smaller contract than the SPX. And if you do have a smaller account, there is also I think it's XSP. They're 1/10 the size of the SPX. And then there's nano ones that are like 100th the size, which, that's like going on a date with your cousin. Like, why do it? So those are some ways where you could trade. If you've got under 25K, you can do the same things like that. Okay. So this is the $50,000 account. This was on this particular day. It was a pretty solid day. My goal is 2,500 bucks. Sometimes it exceeds that. And then this is an example of the iron condor that I placed overnight. It was down a little bit, but then the next day, we stayed within this range and it was fine. And that's a setup I would talk about, of course, during the Saturday class. I'm going to do it. So these are examples of the trades I've been doing. So typically it's day of expiration, SPX spreads. Sometimes, depending on what's going on, again, I got my checklist, adding an iron condor for the next day expiration. And again, why spreads, not directional longs or calls or puts. And I've talked about that, but basically, instead of going long one call, I'd rather sell 3 spreads for all the things that we've talked about. Basically, if it does what you think it's going to do, your profit potential is the same, but it's a lot easier to manage. And if it's going sideways, you could still make decent cash on the spread, but you're going to lose money on that. And I've taken some screenshots where I would sell, like, say, a call credit spread, and then I bought some out of the money puts just to show. And like an hour later, the market had traded sideways and I'd made good money on the spread, but my out of the money put was basically dead, like lost its ass, pardon my French, because of the premium decay. And so once you start to understand that, you're just like, okay, fine, I'll embrace the spreads. Okay, so it's the 0 days to expiration that is the game changer here. And and it's kind of hit me even this week. What's today? Wednesday. So I set up a put credit spread on Tesla on Tuesday, and I also did the same on the SPX option, and they both took off. The SPX option was like 50% profit, awesome. Tesla barely budged. And I'm like, well, why is? And I'm like, oh, because the expiration isn't until Friday. So that's the other thing is, like, we could do spreads on Tesla, but we kind of got to wait for a while, like days. And I'm not, and don't get me wrong, there's nothing wrong with that. But it really sunk in the advantage of these 0 days to expiration trades. My theory is that we're going to see more instruments move to that. All right. So, okay, we've talked about that. So here's an important part of this too. So why not directional futures? And again, I do directional futures. I'm not against them, but a huge part of consistency is keeping losses at a minimum. And I found that a struggle for many people, and can happen to me too, is that if you're long a bunch of futures, right, or whatever, and the market just suddenly pukes against you, and you're kind of like, okay, it's puking. I didn't place a stop. I'm going to wait for it to come back, but it just keeps going. It's a deer in the headlights moment. And at all costs, as a trader, you've got to avoid the deer in the headlights moment. You can ruin months of work on one day like that. And the spreads help protect a person from themselves. That's why I would rather do a large spread, which has limited loss, which, if it does kind of puke against, can actually salvage, versus something straight like that. Okay, so my own goals here have changed too. Again, mostly just kind of watching, James go through this process. Give me my $100 and let me get out of here. And it really just kind of makes me realize, because I think before it was always like, oh gosh, I need to wait for a big move to make a lot of money, right? And so a big move like this, you would think like, wow, that's more advantageous to the trader because you make a lot of money. There's a big move up, there's a big move down. But in doing this strategy, basically it'd make the same kind of money on a day like this as a day like this. Okay, typically a day like this is like, oh my God, that was a crap day. I wasn't able to make any money. But because of the nature of the 0 days to expiration spreads, it's the same opportunity, even if it's pretty narrow like that. Okay. So on this day here, you can see that was, well, we also had ENPH. And then on this day over here on the SPX. So, here we had this big trend day where the S&Ps were up 80 points in one day, and it was good for $350,000. But here it was a chop fest, and it was almost $250,000 on the SPX, and then some money there on that ENPH. So the point is that you don't need. Oh, let's see what happened. Is my screen still sharing? Because I just saw some things move. I will reshare it. Sharing on. Stop sharing. Yeah, we'll look at today. Today was the first day I'd look at it. I've done it with FOMC and all that kind of fun stuff. Yeah, okay, what slide do you guys see here? You should see a slide that says what is important here. It's good. Okay. All right. So basically my goal is still the same. Whether Oh, here, you know what? Let's look real quick at, let me see if I have today's action here. Yeah, so you can see today's action here. I mean, this was on the S&Ps. So you can see we came down to this lower band. We got a nice bounce off of it. When we came back down here, I sold a put spread, and then and then once we got, because here we go. You'll see over here. We had gotten some buy signals over here against that, and then it just kind of dropped. So we got out. So I just exited. Once I got that arrow, we got out. That was the first time I'd used it in a very, very fast environment like FOMC day. And it was cleaner here on the SPX. So, and you can see we stopped dead in our tracks here um, at that 50 EMA on the hourly chart. And then here we just kind of rolled over and died, and then that's when we got out. So, I'd never used this before on FOMC day, but as I look at it, it's kind of like, okay, you can still go with the flow even on these really, really volatile days. Okay. So anyway, so the goal here is just I want cash in my pocket. So here's what I found in looking at these charts. The mind is like water. When it's turbulent, it's difficult to see. When it's calm, everything becomes clear. And the biggest thing I found in utilizing the setup is that things are just clear. Okay. Meaning like if there's nothing to do, there's nothing to do. That's pretty clear as well. And it's like, oh, it's pretty clear that this is where we should get in. It's pretty clear when we should get out. And because I'm focused on the SPX and because I can meet my goals at the SPX, I'm not having to scan through hundreds of charts. Now, don't get me wrong, I'm not against like the occasional trade here, but as you guys know, SPX, I don't know if you know this or not, you get good tax treatment on those too, and they're liquid and all kinds of stuff. So it's kind of my first choice these days, until and maybe until we get Powell lowering rates again, and then we all just buy Bitcoin and call it a day. All right, so how did this all develop? So let's talk a little bit about these tools. So first of all, my two youngest have always been interested in the markets, which is pretty funny. They actually, they got their checklist. They like to do it. If they need money, they come over, they set up a trade, and they're done. And anytime I, tried to talk to my oldest about it, I don't know, he just completely rejected it. Like, I don't know, I'm not interested, and whatever. I don't know why. So that kind of was hurtful as a dad because you're like, you want to, I want to do good. I want to help. And then at the start of this past summer, he kind of finally approached, 16 is like, hey dad, would you mind showing me how to trade this summer? I'm just like, do what, Willis? And this is when he kind of talked about that his friends were, working at Subway and they were making $80 a day after taxes. And he started to think about it. And all of a sudden trading seemed really interesting. So I'm like, all right, yeah, let's do this. So I was very excited, but I was also terrified. What if I blew it? Father fail. I mean, I've been doing this a long time. What if I threw, 30 years worth of information at him and he just got frustrated? So the first thing we did is we just did a 5-minute chart, because he wasn't going to do multi-week swing trades. It was just like, I need my $100. So I was like, okay, let's do 5-minute squeezes. So, here's a squeeze, we buy it and we go. But as we started watching it, this was on the spiders, it's kind of like these markets are so volatile. It's like, okay, well, here's the moving averages pointing down, but then this is going up. It's kind of all over the place. So it actually wasn't that easy. I love the squeeze on like, daily charts and hourly charts, but 5 minutes kind of all over the place. So that was a fail. And again, it goes back to like, okay, $100 a day. I don't want to do any overnight trades. I want an easy entry signal. I want consistency. And I don't want to guess if I'm in the right side of this trade or not. And so basically I had to take that information and just reverse engineer it. Because I always started off, you do the setup and then the money will follow. So that's been my whole philosophy, what I've learned in trading. And what he showed me was like, well, this is the results I want. So then I had to reverse engineer and say, like, well, what could we look at together to achieve the results that you want? And that was a different way of looking at it. So the things that were important here were to be able to pinpoint intraday turns as precisely as possible, have ongoing confirmation that the trade is still okay to be in. Like, is it okay? Am I wrong here? Having a visual assurance that the decision was correct, having visual cues to tell you the trade is ending, and then with the underlying theme that consistency was key. All right. So basically, make your money and get out, quick hits, no loitering. This was not the type of trading that I did before this, but this is the type of trading that he wanted to do. So what we found is a couple of things. So I looked at RAF on multiple time frames, but RAF that's for me, that's a 30-minute and above tool. That's for bigger swing trades. So cross that out. I looked at MACD 2 lines, and I actually like that one too. But the first one that grabbed my attention was the squeeze histogram. And I know this is an eyesore, so don't worry about it. But what you'll see here is there's a 1-minute chart, a 2-minute chart, a 3-minute chart, a 4-minute chart, a 5-minute chart, a 10-minute chart. And in this case, it's like, okay, great. Well, if the histogram, what's the histogram doing right here? And if they're all starting to turn at the same time, what kind of move are we going to get? I'm like, okay, that's interesting. And so, talk to Eric, and he put this together. And I'm like, okay, well, this is cool. So here we're importing the squeeze histogram from multiple time frames. Still a little confusing, right? And so then what we did, I'm going through this a little quickly just because this is just some of the basic stuff. Then we color coded it. So like if it's, lime green, it means that everything's moving up together. That's when you're going to kind of get the best moves. And then when the color changes, that means we're starting to roll over. That's when you can kind of take your profit. And it's like, okay, well, what about, again, lime green, 6 out of 6 oscillators are rising. And then, if it's orange, that means 6 out of 6 oscillators are falling, etc. So then it's like, okay, but what about some arrows to kind of guide us? And so here then is that as each level crossed the 0 line, you'd get an arrow. Okay, so guess what? So this was a 1-minute chart. So the 1 and the 2-minute cross, there's some arrows here. Great. You can go along here. Here's your stop, or you wait for a sell signal. Okay, so in this case, this was the spiders, and this is a trade that James took, getting in at about 407.75, didn't get a sell signal till 410. Okay, 50 shares a day, he makes his $100 and he's done. So that's the kind of stuff where I was kind of interested in. And the same thing here, like, and let's say you're just long here and you're like, oh my God, here's some sell signals. Yeah, just get out. You can go short if you want to as well, but you can kind of see and you can visually see how these are all dying, right? And so that's when I started getting excited about this, where it's like, okay, it's multiple time frames, which that could be complicated, but how do we make it easy? All right, so James started doing this. He even did a trade. He got home from school early on Tuesday, knocked out a trade in Tesla, got his $100, et cetera, et cetera. So this is a trade he did on GameStop, and he's just doing shares. I didn't want to bring in futures or options. He saw the arrows, he got the shares, and in this case, he didn't get a sell signal until he's already at $421, which was awesome. This is another one he did on UNH, and he got the signal, 100 shares, and he got out, at the close. In this case, because he didn't want to hold overnight, he never got a sell signal, which is great. So what have I learned on all this? So you got to get clear on your why, because the problem with trading is that it's a fantasy sometimes. It's like a video game. And if you're just trading and knocking it out, and it's like, oh my gosh. And so I'm a huge fan of wire the money out. And I've found that this is tough for me, is that if I keep compounding my account to get bigger and bigger, mentally I start thinking I have house money. Like I got some room to play with and I'm going to do some bigger, stupid trades is really what it comes down to. And so what I find is I like to wire out the gains every week and then I put them into stuff. I like collecting rare coins. So this is a super rare coin. This came up for auction like last year. And it's a rare coin. So that's the kind of stuff where it's like, okay, great. This is in addition to, experiences with my family and things like that. I've always been passionate about coins. Guess what? Trading is a way to buy cool coins that I never would have dreamed of owning as a kid. So that's part of my why. Also financial freedom and all that kind of stuff. So you just want to get clear on that, because if you're not, the market will screw with you. Your ego, and if you're not clear on your why, your ego will take over and really screw you. Your ego has many agendas that have nothing to do with what you want or what you desire in life. It thinks it's protecting you. Your ego, has to be right and make everybody else wrong and all that kind of crap. And it's not good. It got you through childhood, but it needs to retire. So get clear on what your 3% to 5% of your NLV as a goal each day gets you. Okay. And by the way, that's my goal. Your goal might be 1%. Okay. I've been doing this a long time, so I have kind of strong intestinal fortitude for doing larger size. Totally cool if you're like, you know what? Guess what? 1% a day is 1,200% a year compounded. So 1% a day is nothing to sneeze at. So for me, I do have specific cash goals, especially, around coins and real estate. And also there's some freedom and not having to have that pressure of trying to find the next big trade. It's like, I'm just going to generate cash, How boring is that? So, um, now here's an interesting thing. After 10 winning sessions in a row, I had my first losing sessions. And why did I have my first losing session? And this is exactly what happened here. So I did I got the buy signals here. And you remember I told you about the NDX? I sold a put credit spread on the NDX. At point number 2, I should have gotten out. I just wasn't watching this chart. So I'd gotten so confident in my ability after 10 days in a row. I'm like, I don't need this chart anymore. It's all me, baby. I'm doing this, not the chart. And so I just ignored this and we came back down. I'm like, man, I had all this profit. Now I'm at a loss, but we started to rally again. So I'm like, whoo, yeah, I still got it, baby. And then we puked into the close and I couldn't get out of my NDX spread and it turned into a loss. And I was so frustrated. And then when I looked at this chart, I'm like, because I got cocky after 10 winning days in a row. I thought it's all me, baby, but it wasn't not me. It was the damn chart, and all I have to do is follow the chart. And so, again, lesson learned. It's a new thing for me. Okay, so what time is it? 7:52. Okay. So, I wanted to show, these are just examples of trades. The best day I've had is I had a $600,000 day. I think I've got a screenshot of it. Yeah, I had $561,000 on SPX and then 80,000 on NDX. And this is when I was still experimenting with NDX and then decided to stop that. Yeah, so what am I risking? So what I'm doing here is typically, again, big account, right? So in my 50K account, obviously this is not my 50 account. I'm doing one contract per 10K. Okay. In my larger account, I'm doing one contract per 20K. It's just a wider spread. It's a $25 wide spread. This is a $10 wide spread. Typically, I'm getting into this for about 11 bucks. So you'd think of that as max risk as $16, right? But I don't let it go to max, it doesn't go to max loss. The only way we go to max loss is you put on the spread and you walk away. You put on the spread, you don't pay attention. Or you do something like at the last minute, like today, FOMC day, anything can happen. FOMC day is, either you make a killing, you get killed, or you just kind of watch. And I used to like, FOMC day, let's try to make a lot of money. Today I did one trade in the morning and made a few points. And then this afternoon I did a trade and I lost a few points. I'm like, you know what? It was my first FOMC day with these tools. I think next time though, I'll probably get more aggressive now that I see kind of how they worked and where they turned and everything like that. Okay, so here's the thing that I found with this. There's this, I think Elon Musk posted this. It's like, oh my God, it's out of my control. That's sad. What I love about this is it's out of my control and how freeing this is. It's like complete freedom because you just subject your will to that of the chart in front of you and quit trying to outthink the market. Quit trying to be smarter than the market. Be dumb. Just follow along. And it's hard for me because I'm like, oh God, no, I got to outthink it. I got to look at these other things. And I find that when I just, that's what really hit me between the eyes that day, the day 11 when I lost money that day, how I just stopped looking at the chart. I'm like, I am a genius. I'm doing this so well. And it's just like, and it's great though. That's what I love about the markets. Every day, you gotta, it's like a golf shot. Every time you line up for a golf shot, if your head is not clear, you're gonna, hit it into the water. You gotta be, Bruce Lee, that blue, that crap. Okay. So yada yada yada. Okay, so here's kind of like what the chart looks like, right? So what all is on this chart? So in general, what you're looking at is, we kind of look when you see these dots, that just shows that the oscillators are turning. Okay, and then so the dots to me are a heads up. Okay, it's like, all right, so let's say first of all, if you're short and you see the dots, I like to start getting out. But for entries, let's say here, like, okay, we've come down, we got the dots. So now I've teed up my order. All right, so my order is teed up and ready to go, but I'm not going to execute it until I see an arrow. When I see the arrow, it's like, okay, I'm in. And then what you want to do is you want to see, okay, so this one's crossed, you want to see all these start crossing, arrow, arrow, arrow. When you start to see the first dots, that means that we're starting to run out of gas. Now, that does not mean that it's going to roll over and die, but guess what? Grab the cash, grab the cash. So I'll exit. Depending on where we are, in this case, I may sell a call credit spread, I may not. That's, it depends on a couple of things there. Basically, I'll kind of look, where are we on the daily chart and all that kind of stuff. But I'll also show you some other things that we're importing in the chart to make it easy. And then same thing here. It's like, okay, well, this was a trend day. And then, when you see these dots, that's just a heads up. And then when you see the down arrows, yeah, it may be a little bit like this, and then it holds and rallies, but it also may swoon. That's why we just get out. We don't try to guess. And by selling spreads, you're capturing the theta decay. You grab the cash and you get out and you just flow with it. Okay, blah, 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 blah. Yeah, and so what I found is that, in day trading, and so these are day trades, right? But I don't scalp. The average trade seems to last 45 minutes to a couple of hours. By the way, you can do larger time frames and hold on for longer, like a couple of days. Same thing, spreads. I'm going to hold for a couple of days, and that's fine. But what I liked about this is that prior to this, what I found in swing trades is that I might, there's one day, I'm talking about like, oh, I want to make 3% a day. And when I was swing trading, I might have a day where it's like, oh my God, I made 6%. And then there's a retracement day where I lost 4%, right? And then there's another day where I'm down another 2%. And then we come back and I'm like, that's not as fun. I love this idea of just flowing in and out of opportunities on shorter time frames. And again, I don't like scalping, but can I put on the trade, work on other things? I'll go out to the gym. I got my iPad up so I can just kind of make sure that everything's okay. So just different things like that. And I've been trying this with again, NASDAQ futures, SPX. In this case, I did a trade on Tesla, UNH, and they're all fine. But again, I've talked about all the benefits of SPX, and I'm just a huge fan. Very, very much a huge fan of that. Okay, so a couple of tweaks I wanted to do. Now, I talked about the squeeze histogram. The other thing I like, and I know a lot of people like to use this in the room, is the MACD 2 lines. And so at 310, they're super fast. And so what I had Eric do is do the same thing, is just let's take the MACD 2 lines and also code it so I could have that faster indicator as well. So that's what this is. So I've got either the histogram, which is nice. It's more even keeled for the histogram, but then the MACD 2 lines is faster. So if in the room you're talking about, oh my God, the 5 and the 10's turning higher, now you can see it on one chart. And in this case, I'm looking at the 5, 10, 15, 20, 30, and the hour all on one chart. And then when I see the dots, that means the MACD 2 lines are turning. And of course, the arrows, you get the confirmation. So what all is on this chart? So again, 5-minute chart. This is kind of the setup that I've been using here. So I've got trend rotation here. These are the larger time frames. But on the 5-minute chart, I'm importing the 50 minute chart, the 50 period exponential moving average from the hourly chart, the 21 period exponential moving average from the 30-minute chart. And then over here, you can see the 8 period moving average on the 15-minute chart, which you can also add on here. And on the outside of this, I'm importing the Keltner channels from the hourly chart. Now, I know that's a lot of information, right? But what I found is now I can look at the 5-minute chart, get the signals, and then it's just pretty clear, like, okay, once you get here and you get dots, get the hell out, right? You can kind of see things turning and stuff like that too. The other thing I found that's really, really powerful is that when you get crosses from multiple time frames. So here we've got, again, the 8 EMA on the 15-minute chart, the 21 EMA on the 30-minute chart, the 50 EMA on the hourly chart, and then this is the 5 EMA from the daily chart. When the 8 from the 15 crosses the 21 on the 30, you typically get a pretty powerful move. All right. So that's something that was something that I hadn't seen before. And again, you can see all these rotations happening, right? Now there's a lot of arrows, but remember, each arrow, it's like, oh my God, it's a lot of arrows. But what you're looking at are these, is everything under 0 and starting to turn higher? Well, then you're going to, you want to see a lot of arrows, right? Each arrow is just kind of like, hey, there's another one crossing. So these tools have made my trading life a lot easier. I trade more in the morning when the moves are happening. I find that, typically I used to like to set up trades in the afternoon. Now the morning is like great. The setups are clear. I can sell same day expiration credit spreads on SPX and take a lot less risk than a directional trade while making the same potential profit. I can focus on hitting monetary targets each day instead of sitting through 4 days of moves against my swing trades, which I've certainly done. What I found is that traders are not born with the patience gene. They have to learn it mostly through brutal lessons. Trading is merely a game of the patient taking money from the impatient. And I found that this setup helps me stay patient. I'm just waiting. I'm just waiting. Finding the right balance of patience and determination. Determination, patience, and courage are the only things needed to improve any situation. So in working with James, these are the tools that we developed. So the squeeze histogram rotation tool, this monitors the histogram on 6 time frames. So you can import it into 1 time frame. The trend rotation tool, that's the faster one. That's like the MACD 2 lines. You can do it on 1226 or 310. But now you can see the MACD 2 lines on 1 chart from 6 different time frames. You can catch those turns and those hooks. And then this tool where we can import the Keltner channel and the moving averages from other time frames. Okay, so it's a cleaner market path, more consistency, and less stress. The other thing I found is that I call it the EMA percent tool. Is that essentially if we are 1% away, like say from the 21 EMA on the 30-minute chart, I want to know that because that's also a time where it typically is going to turn. So just little things like that. So I've given you a taste of what I've developed over the summer and working with James, and there's a lot to unpack here. And so I hope this resonated with those of you that have similar goals that I do in trading. Look, this is just about making money. And, not to be crass, but it's like, oh gosh, do I want to be right? Is my analysis correct? Is my long-term projection accurate? Who cares? I want to make money and I want the money in my account that I can go buy a rare coin or go on vacation or whatever I want to do with, because the Fed ain't going to bail us out. They're screwing things up here. They're going to drive us into a recession. And the only way where we can essentially, make sure that we've got that security is to generate that cash. And we've got to do that on our own. So don't be intimidated if, this is new to trading or if this seems intimidating. I've got a class I'm going to do on Saturday. I want to break this down step by step. I typically I'll kind of overload on a webinar like this, but then we'll just kind of break it down and just distill it to the essential things that you would need to do. And this is essentially about generating consistency. And once you have consistency, you'll gain confidence. Daily income, more ease, less drama, no matter what kind of show is headed our way. So again, the mind is like water. When it's turbulent, it's difficult to see. When it's calm, everything becomes clear. The big thing I'm a super fan of in trading is that we do only have one job, and that is to create an equity curve that starts at the lower left of our screen and then goes to the upper right. Because that's our only job as a trader. It's not to be right. It's not to know exactly where the dollar is going to go. It's not to catch the low in gold. It's to have an equity curve that goes from the lower left of our screen to the upper right. It doesn't matter what you trade, okay? If you're making $1,000, it doesn't matter if it's in gold or the SPX or in Tesla. The cash is the cash, and that's the thing that's really hit home with me as well. A lot of times people ask oh, what about gold? What should we do here? I don't care. I'll buy some gold and put it in my closet, but I'm going to do this spread on SPX for the cash. So that's been very freeing. It's it saves a lot of time. So get in early, get out early. So the thing with this trade, especially with spreads, you can kind of get in a little early. You don't need to wait for 18 confirmations. That's the big thing. But then when you're getting out early as well. Get in early, get out early. Not get in late, get out late. Once it starts to roll over, it's hard to get out, right? So I like to leave some for the next guy or gal. So the secret is being able to go with the flow of what is happening, not what you think might or should happen. Okay, big one for me. And it is also important to control the emotions of fear and greed, which always cause people to do the wrong thing at the wrong time. So how? Take the emotion out of it and flow with the river and trying to swim against it. Okay, so what is this quick hit strategy class? This is going to be on September 24th, which is this Saturday. Now, don't worry if you cannot attend, if you've already got plans. We're going to record it. Sometimes people ask, well, when's the next time you're doing it? There ain't going to be a next time. There is kind of some deals that if you so once the class is done and it's finished, it'll go into our store. typically it'll be at a higher price. There'll be additional tools that aren't available then. So if this resonates with you, you want to get this, and you should see something on your screen for this link. We pushed a page to you, and you can just click Learn More Now, and it'll come up there. I'm also going to do live trading on September 28th, and then again on October 6th, because I think while the strategy is important, and I think, and the reason I do it on a Saturday, because if we did a class together during the market hours, none of us are going to pay attention to the class, including myself. We're just going to live trade. So we do the strategy class. We learn how to do this. We get our playbook, so to speak, and we get all on the same page, and then we can live trade together. It's like, if you're going to play golf, if you read the book, you're going to have a lot of golf knowledge, but until you swing the club in front of a professional, you're really not going to have your act together. So that's the whole premise of this. And then we're going to do a live in-person mentorship for those of you that are interested in that. We can talk about it. So what is all this going on here? Okay. So here's a lot of stuff. So what's going on here is this. Okay. On Saturday, we've got a basic package here of $797. Basically, that's probably, let's say, 2-lot trade on the SPX using this system. So a strategy class and comes with that, right? It also includes the multi-time frame squeeze rotation tool. That's the histogram one. That's the one that James has used. Now, we did a bonus here for the options gold room. Okay, this is where I'm going to post the trades that I'm doing using the system. So if you're not a member there, we give you a free month so you can go in there and at least see the trades I'm doing on this system, and of course ask questions. If you're newer to options or futures, we've included the options 101 and the futures 101 in here. Guess what? If you've never traded options or futures before, you can do this with buying the spiders. Okay, just buy SPY. That's what my kid did. It worked great for him. Now, these bonuses also are included, and these are available up till basically this class starts on Saturday. After that, they're no longer included. So the EMA percent utility label, that tells you on your chart how far away you are from a specific moving average, and I'll show you how to set that up. But also the EMA and Keltner channel import tools, where you can say, you know what, I want to bring in the hourly Keltner channel on my 5-minute chart. I want to bring in the daily 5-period EMA onto my 5-minute chart. And I'll show you exactly how I set all those up. And I really found that being able to look at a smaller time frame, but bring in tools from larger time frames has been an absolute game changer. All right, so that's all in the basic package. Now, for a modest upgrade, you can get to the pro package. And with that, you, of course, get the strategy class. You get the rotation tool. You get a free quarter to the gold room if you're not a member. For the same, again, that's where I'm going to be posting these trades, so you can kind of follow along. Of course, you get the options 101, futures 101, you get these tools, but you also get, I talked about the faster, 2-line MACD rotation tool, and that's just faster. And it's really more for, like, especially if you're like, man, I want to nail this turn, or if you're trading a stock, it's really handy for that. That's included in this. I do both, but this one it's the faster one. It's included in there. It also includes 2 days of live trading. Now, the elite, you'll notice that that's certainly a big bump in price. This is for people that, like, you know what, I get this, but I also want to get out of my crazy life, and, I want to get out of my bubble. And for 3 days, I want to go immerse myself with other traders, with a simpler team. Because in a situation like that, what happens is over the course of, 36 hours, you can have more insights into your trading than you will in 6 months at home with the crazy insanity that's in everybody's life. So that's why we're doing it. With this, you get obviously everything that's included there, but you also get a $1,000 store voucher, so you can use that, for other stuff. And of course, that includes that in-person mentorship. All right, so there's a lot of other slides here that you're going to see on the sales page. I'm not going to read through all these. I'll bring this. Let me see if I can bring this up here. Okay, so on the course, you can just do the drop down here if you want and say, oh, I'm going to get the pro. If you need a little bit more information, you'll see all the information that's included here, and all kinds of stuff here. I'm not going to bore you and read all this. I just want to focus on answering questions. Here you can compare the packages, and if you want to get it, just grab it, and there you go. All right. Whoo. So boom, extra bonus. There's one more thing I did want to show you guys. So yeah, the bonus. It's funny, when I first did this, we just did the rotation tools, but as I played around with it, I'm like, you know what? And I hit up Eric. I'm like, can I import moving averages from a higher time frame? He's like, yeah, here. Can I import Kellner channels from a larger? He's like, yeah, here. Can I? So we're just including all that as well, because I just found that they were pretty useful. So the 2 days of live trading, generally on this, because being on the mic all day is tiring. Generally, I'll be on the mic from like 8:30 to 10:30, and then we'll just kind of type, and then I'll probably hop on again during the afternoon. But the main goal is that we're doing trades together, and it just it kind of depends on the market, but it's we'll just be hanging out kind of all day there. Live events are fun. We keep them small. I would rather do an event with like 50 people and get to know everybody. Tom Sosnoff is going to come join us. We do a poker night, which is a lot of fun. If you've never played it, it's a good way to learn about money management. Real stakes. Everybody chips in $50. The winners can get a couple $1,000. It's pretty fun. And we do it at the University of Texas. So they got stadium seating. It's the AT&T Center. So you get your own. It's great. We've done it at other hotels, and man, it's always hit or miss with the internet and stuff like that. When you're trading, you can't deal with that. Okay, so we do have VIP attendees for the live event, and there's 16 spots left for that. And with that, for some reason, I agreed to do a 2-hour call with the VIPs. And that'll obviously be over Zoom, and we can just kind of go over whatever you want to go through. But also, you'll have meetings with all different traders while we're there. You basically get front row seating at the conference and all that kind of stuff too. So it's kind of fun if you're into that kind of thing, and it's kind of good. We're gonna have some great traders that are there. Of course, Henry and I have been doing this together for over 10 years now. Bruce almost the same, Raggi almost the same. It'll be great, bringing in like David and Bruce and Sam and Taylor and Joe and Cody and Allison, and it's just so fun to get together. Tom and I have known each other for over 10 years, and we really enjoy it. We both are really, really appreciative of this industry, and he's going to come down and hang out and talk for a bit as well. And also, by the way, this is a cool thing, is that if you would prefer not to pay right now, we do have this program with PayPal where you can go through PayPal, and basically you get it 6 months with no interest, and then you can start making payments. We've had clients who have done this. They learn, and then they use their trading profits to pay off the PayPal. Is that guaranteed to work? Of course not, but people have done it. And, I definitely will have a trading manual for you that if that's something you want to try, you could certainly do as well. Okay, so that's what we got. So happy to stick around and answer questions. I'm just going to leave this right here, and let's see what we got here. Questions. Yeah, so will there be scans? Hey, Brad. So yeah, scans on this. I have not done scans on this on the smaller time frames. I just have one time frame, and it's just right there. So what I'll do is I just kind of look at this and say, okay, this was again, this was my first FOMC day with this, but as an example of like this is the other day where we're like, okay, great, let's sell put credit spreads. We're going to the 21. Let's get the hell out, right? Or we popped up here, great, let's sell call credit spreads. Again, all this stuff. And I know it looks like a lot on here, but it's actually pretty clean. And if you would rather, like, you know what, no, I'd rather just trade Tesla. This is, you can trade it on Tesla too. So you can see same thing. I mean, we come down into this key moving average and all that kind of stuff too. Once you get the arrows, you're seeing basically these things are crossing, and it's just time to get the hell out if you're doing those shorter term trades. So, so that's what I'll kind of do is checklist and say, like, look, here's what I'm looking at. Here's the file, all that kind of stuff. I just love this it's the combination of this multiple time frame oscillation tool combined. Here it's like, okay, percent, that's the percent from the EMA, all that kind of fun stuff. Yeah. Okay. Good question. So on the 30-minute chart, and I'll share this chart with you guys too, is so on the 30-minute chart, what I'm looking at is the 5, the 8, and the 21 EMAs from the daily chart. Because I just want to know, where are those bigger time frames? And then of course these are the larger oscillators, the from the hourly, 2 hour, 4 hour, et cetera, et cetera. So on this, I kind of look at a little bit bigger picture trades. Is there a squeeze setting up, et cetera, et cetera. And then of course that's the oscillators. Yeah. So with a 25-point spread, can you adjust if it goes against you? Yeah. Typically, if it goes against me, I just get out. Now, sometimes what I'll do is if it's a little hairy and it's like, oh, I might do the 25-point spread and then like buy some out of the money puts. It gives me a little bit more flexibility. But typically, I get in. And then, if it starts to show some signs of like it's flopping over, then, I can just get out of it. A lot of times, I might be in something that I sell it at 10 and, for 30 minutes, it's kind of chopping back and forth. But during that time, it's dropped to 8. So I'm still, making money on it. But generally it's there's key levels that it's like, hey, if this rolls over, you don't want to get in there. And also too, it's like, especially when you're like 1% away from the moving average, you're looking for that snap back. So it's pretty clean. It's pretty clean, when to kind of get in and when to kind of stay out and all that stuff. Okay, good question, John. In your opinion, as a trader, could this be used with a $2,500 account? So the answer is with SPX, no, unless you want to do 2 trades a week because you have the day trade rule. That being said, you can do micro futures, you can do ES options. Okay, you can do the same spread that I would do in SPX. You can do an ES futures options. In fact, I do those sometimes, and those get around that rule. But you can also do the micro futures. Like I said, I do ES futures on these as well. So that part's great. So if you have a smaller account, the answer is, to me, is it's the ES options, the micro futures, all that, all the things there that are great about that. Let's see. Yeah, okay, good question. How do you avoid getting faked out in shop? Okay, so the first thing is, where you want levels to get in, right? So again, today was kind of weird. It was FOMC day, all that kind of stuff. So if we look at this, let me show all the tools on here. All right, so if you look at this, so where I'm interested in, on a typical day like this, it's like, okay, well, what's kind of going on? First of all, if we're at this lower band on the hourly chart, okay, I'm looking for a bounce. I've just have yet to see it really push below through this, even today. So if I see it's here, and yeah, you know what? You're looking at this, it's like, well, gosh, it's not doing much. And for a long time, it just trades sideways here. But you sell the 3825, 3800 put credit spread, it's doing nothing. You can see the oscillators are all kind of trending higher. It's doing nothing, right? It's doing nothing, it's doing nothing, it's doing nothing, but you're making money. So when you're at an extreme level like this, honestly, it's a little easier. More the question, and then at some point we did kind of we didn't get much of a move, and then we got a little bit of a pop here, and that's kind of typical, right? You kind of it's chopping, but you're at a level where you're looking for it to revert back to that 21. To me, the trickier one is when you get to the 21. Are you going to pause and pop up to here, or are you going to roll back over? Right. So now here's the next day. So like this, I'm just kind of waiting. I want to I want to see that we get that percent away from that EMA. So there's some situations where I'm just like, especially in the middle of the day, eh, you know. But one thing I found is that, if you've got the 8 from the 15 below the 21, and you're sitting here around the 21, you get sell signals, yeah, sell a call credit spread, because you can see everything's starting to roll over here. You don't need the thing about this is you don't need big moves. A 10-point move in the SPX is fine. But you're not taking every arrow, right? There are things like, okay, are we 1% away, from something? Or did we pop up here and we're going to buy the pullback, to that 21, that kind of, so I've got a checklist for all that kind of stuff. Cause I can see, you see all these arrows and it looks kind of daunting, right? It's like, oh my gosh. But generally, if you're up here, that's about as high as you're going to go. And so you're looking to sell call credit spreads. And then, you're just looking for those. And then, you can drill down over here on this one as well. So this, of course, is a mess. It's a 1-minute chart, right? I don't trade off of that. I just use it as a heads up for what's happening over here. Yeah. So Robert, great question. So can it be scaled for swing trades? And the answer is yes. So, as an example here, this is the half-hour chart, right? But what I'm looking at here is the 30-minute, the hourly, the 2-hour, the 4-hour, the daily, and the 2-day oscillators, right? And so there are things like that where, if you get a sell signal, typically it's going to last for a while. So even though I am focused more on kind of day trades, I do have chart setups for swing trades as well, which we'll certainly cover in the class. Yeah, so Don, that's the idea. And I know, you look at it and it's like, oh my God, that's a lot of arrows. But the idea is kind of like a one-page checklist and say, okay, first of all, are we 1% away from the 21 EMA? If we're not, don't do anything. Or are we 1% away from the 15 from the 8 EMA on the 15-minute chart? If we're not, don't do anything. So there's some great filters there, and because what you're looking for are those rotations. You're just, it's specific action items for those rotations. Yeah. So Bob's just saying like, okay, oh, can you trade a stock? Yeah. So you can totally just trade a stock. So my son uses this. He's like yesterday, he just bought Tesla. He got 50 shares of Tesla. He got 2 points. He got his $100 and it was done. If you don't know how to do spreads, one of the which is totally fine, by the way. We are including an options 101, and you can do baby steps. And when we're doing the trades together during the live trading, I typically like to do kind of a plethora of stuff, meaning like, all right, guys, here's the thing. So I'm going to do a spread, but then let's also buy the spiders, like for those of you that are just doing stock. And then that way you can kind of see how that works as well. Yeah, so for the FOMC and all that kind of stuff, we're going to see kind of how this works. If we look at this on a bigger picture, after hours, it's like, oh my gosh, what's happening here? And yeah, so on stuff like this, like, I don't have anything overnight. I'm just kind of watching. We're getting extreme. We're getting 2% away from that 5 EMA. And guess what? These things that test its 5 EMA almost every 2 or 3 days. So when you get too extreme like that, you do look for that snap back. So that's the kind of thing like this where it's great. It's like, you just kind of wake up in the morning and you just kind of start with what the signals give you there. Mm-hmm. Let's see what else we got here. Yeah, so you can do it with a 10K account. Your main challenge with a 10K account is just going to be those pesky day trading rules, right? You can only do a couple day trades a week with the 10K account. The way around it is you can do ES options. It's the same thing. You could do things overnight as well. So the answer is yes. I've been focusing on more like couple hour trades. But the way around it is, ES options, because it's the exact same trade and they're just as liquid these days, which is great. And yeah, just a different few things like that. What brokers do you use? So this is available in TradingView, by the way. So for those of you that use TradingView, this is Thinkorswim. And I'll show you one I was looking at here today too, TLT. So here you can see TLT. This was one that we were looking at. And so you got the arrows, you got all the oscillators coming up. To me, this is something that's changed trend. You can see we're through the 5 and the 8, right? But this is Thinkorswim. So if you have if you have Thinkorswim, awesome. If you've got like Schwab or Fidelity and you don't want to change, so this is what people do, because we have not been able to develop our tools for Schwab or Fidelity for whatever reason. Well, Schwab bought Thinkorswim, so. But what you can do is you open up a Thinkorswim account. It's free. They don't charge you for the data. You deposit like $100. It's your money. They're not going to take it. And then you can use Thinkorswim for charting. It's free. And if you want to execute on Thinkorswim, that's fine. But you can execute on whatever, wherever you want. So we're kind of broker agnostic. We've just found that, for charting, like TradingView has been pretty good. Thinkorswim is pretty good. I execute on Tastyworks. So that's kind of my broker of choice. I do some on Thinkorswim as well. And then we know we are slowly adding our tools to the Tastyworks platform as well. Yeah, so I did an unbalanced butterfly today, and basically it was just so the unbalanced butterfly was essentially a bet that maybe we're going to get to 4,000, but probably not. Which I know is kind of an unusual bet. So if I look at this and just kind of back up a little bit, when I look at 4,000 here, 4,000 is, it's above that falling 21 EMA. So I'm like, well, geez, if we could race up here, that'd be great, right? But if we could do an unbalanced fly for a credit, that means if it falls, we still keep the money. And if we do get up to 4,000, the odds of it exploding through there are pretty low. And it could turn into a big winner. So I'm a huge fan of those for these types of situations, because like if you're wrong, you still make money. If you're wrong, you make a little bit of money. If you're right, you can make a lot of money. And then if for some reason it blows through that level, you can mitigate it. You can manage it. For the Pro package, it says the bar color changed to bright green or red when all 6 time frames are aligned. Does that mean if we only get the basic package? Okay, so good question. So the basic package, um, what am I looking at here? Okay, so this is the basic package, right? That gets you the squeeze rotation tool. The Pro package gets you the fast, essentially the 2-line MACD rotation tool. They're similar. The 2-line MACD is faster. Okay, so it is more kind of designed for day trading and things like that. But both of them have colors. So if you're on the fence, you could always start with the basic and then upgrade. What I find is, this is what James used, and because it was faster, he did it for like say buying a stock. Or I'll look at it for like say buying futures. For the spreads, they're a little bit more forgiving, so totally fine to just do it with this one too. They're both fine. They're not hugely different, but the MACD one, the rotation tool is a little faster. Have you used these with the voodoo lines? Yeah. So you'll notice over here, I've got the voodoo lines on here, right? So if you're a fan of the voodoo lines, guess what? You rally up to a voodoo line and you get a sell signal. Bada boom, bada bing. It's great. Yeah. So I'm a huge fan of the voodoo lines and combining them with this tool. Absolutely. All right. All right. Is this cost for lifetime? Yeah, okay, that's a good question. So yeah, so like the 11.97 for the Pro is a one-time fee, so that's not like an annual fee or anything like that. The Gold Room, that's if you want to do the free month or the free quarter after that, it's a subscription, and that's up to you if you want to do it, or obviously it's a great community. I mean, it's a really solid group of people there. But the goal with this free month and the free quarter is that you go in and you take advantage of it. Like, that's when I'm doing these trades, I'm going to post them in the Gold Room. There's other people in there that can answer questions, and there's other great traders in there doing trades, and it's just a great community. If after your free month, your free quarter, you want to continue and benefit from that, awesome. That's great, but you don't have to. That would be the only subscription. Everything else, yeah, it's just a one-time. Oh yeah, so good question. So good question too is if you've never used Thinkorswim before or TradingView, how do I install the indicators? So at 12 p.m. Central on Friday, okay, that's like in 2 days, we are going to do a indicator install session. Okay, if you can't attend it live, that's fine. But if you sign up tonight, you're going to get all the information so you can do the indicator install. So you get all the indicators. They'll show you how to set them up on your charts, Duncan, and you'll be good to go come Saturday. All right, Let's see what other questions we got. It is 8:30, so I always like to respect everybody's time, and we can wrap this up. Ba 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 ba. La 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 la. No, so if there's other tools that you like to use, so for example, I like to use the squeeze. Does this replace the squeeze? No. Does it complement the squeeze? Yes. The squeeze essentially is like, oh my gosh, here's a squeeze to the downside. So, typically I know I'm going to get a greater than expected move to the downside, right? On its own. But then when we get down here to the lower band, that's where I use these tools to say, oh, geez, we're turning here. Maybe I should sell a put credit spread, that kind of stuff. So I find that if there's a tool that you like, typically, this is something that can complement it, or it can be a standalone. Some of these SPX day trades are kind of standalone trades for me too. And then I'll look and say, okay, well, what's setting up on the bigger picture here, like on gold or whatever. Are you looking to adopt a 55-year-old son? Who knows, right? My wife just yelled at me and said, "No, you're not." Well, that'd be fun though, right? Honey, honey, are you strong enough to lift up the 1,000-ounce silver bar? I was going to test her strength. She's been working out, but that's the real test. 30 pounds. Okay, not 70 pounds. All right, guys. Well, I'm going to wrap this up. We'll be sticking around to answer questions via text and everything like that. And let me, I will minimize my camera. I think so it doesn't interfere with the screens and stuff like that. And I'm just going to turn. So first of all, thanks for joining. I'm going to pop the camera off. And if you guys are in the gold room, I am posting these trades in there. This is the first time looking at it with FOMC. So I was just kind of like, well, let's just wait and see what happens. And completely looking forward to Saturday. So on Saturday, we'll have a, kind of a trading manual that would continue to build out during the live trading. Just so you know what to do. I mean, my whole goal with this stuff is that you're able to look at a chart and not wonder what you should do. It's like, well, God, should I, what I love about this too is that, you're not, there's a lot of times in the market when it's like, oh my God, GameStop's going and, oh, Tesla's doing this. I don't care anymore. I'm just waiting for the SPX trade because I know that if I'm patient and it plays out, I will meet my cash needs with that. And to me, that's a lot simpler than, scrambling around like a maniac for whatever the stock of the day is. It's just more at ease, I guess is the right way to say it, which I like. Yeah, good question. So when you close a spread, are you closing out both legs? Mostly yes. Towards the end of the day, so this is a great question. So let's say at the end of the day, like, okay, I sold it at 5 and I can buy it back for 80 cents. Well, if the short leg's like $1, buy back the short leg, leave the long one on, right? If expires worthless, no big deal. But if the market reverses like it did today, it can turn into a lotto ticket. So, absolutely towards the end of the day. Early in the morning, not so much because they're pretty fat. Like you could buy back the short side and just get, slapped on that other one. But towards the end of the day, yeah, absolutely. I love that idea. I'm not sure where we are on TradeStation on this. Sometimes TradeStation has a harder time. I mean, I'm a fan of TradeStation. Sometimes TradeStation has a harder time with some of the import stuff, but I'll definitely check with Eric on that. Yeah, so the install webinar on Friday will definitely be recorded, and as well as the class on Saturday will definitely be recorded as well. Okay. All right, guys, I'm going to sign off. Thank you for joining. I'm going to leave this screen up. We are here on hand to answer questions and things like that. You can see we've got a phone number right down here. You can email us, and we're also online. So I'm going to sign off. Thank you for joining. And for those of you that are joining on Saturday, I will see you there. And I'm super excited to share this with you. It's certainly making an interesting impact on my life that I wasn't expecting. And I'm always excited to share that kind of stuff because I know if it's impacting my life, I'm pretty sure it's going to impact other people's lives too for the better. And I look forward to sharing that. All right. You guys have a great night. See you later.